This is the Tim and a Contrarian podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 242 is brought to us by Blueberry Markets. I don't think this promotion is going to be lasting much longer, but right now, Blueberry Markets, if you sign up right now, is going to give you a 40% deposit bonus. So a 40% return on your account simply for signing up. Now, this is normally the type of promotion a fly-by-night, who knows who these people are, broker would give you just so they can get some revenue going. But Blueberry Markets is not that. They are large now, and they have every option under the sun, and you will also get the world's best customer service in your native language. If you're with any other broker right now, it is worth switching over. Not just because you're instantly upgrading, but because you're also getting a 40% return on your money simply by trading with a better broker. Again, the Blueberry Markets blog is down below in the show notes. You click that, you read it, you scroll down to the bottom, click my link, and get yourself started. This promotion is only temporary, and I do not know how much longer it's going to last. It is the Tim and a Contrarian podcast, and I need to put this out there right now because lately, at least, I've been hearing some grumblings from some people. It's certainly not most of you, but it is some people. And I never get this complaint until I do. And when I do, I get it from several people. But after certain episodes, I get the complaint that it's a bit repetitive. And they didn't learn anything new this time around. Again, if one person said it, I'd be like, that's just one person. But I've got it from a few people lately. And that tells me, and I always knew this from my Forex trading videos too, if a few people are saying it, that means even more people might be thinking it. So let's get ahead of this now. For starters, I've done 242 podcast episodes now. And this is a narrow field. I'm not talking about sports or movies or video games where things are changing all the time. So yeah, there's obviously going to be concepts on here you've heard before. But two, this is a good thing. Even in the podcast I listen to, I'm not learning many new things when I listen to the podcast that I like. But it does reinforce my beliefs, which is a good thing sometimes. And I often get new outlooks on the beliefs I already have, which I also think is helpful. And three, you have to understand, this is the Contrarian Investing Podcast. It is contrarian because everything and everybody around us is telling us to do one thing. Yet we've all learned by now that doing the exact opposite is probably the best route to take, or some version of it. And how do you undo decades of programming? It's not easy, especially in the financial space. Most people in media and social media are not on your side. We'll talk more about the social media side in a moment, but the mainstream media, especially in the financial space, I'll say it right now, they are actively working against you. And so reinforcing these concepts, especially when the market that we like and the investments we like go down, and they go down heavy, it is officially time to reinforce these concepts in a big way for two main reasons. One, all of these negative influences have now magnified themselves multiple times over, which is crazy because reason number two, why we need to reinforce these concepts and these beliefs is because moments like this are the exact time when you're supposed to be buying. And they don't come around too often. But when they do, most of us, even most of you, I guarantee, find a way to fuck it up. And I know you don't like hearing this because it assumes that you are weak-minded. But I'll bet one of the biggest reasons why you don't buy is because you allow all this negative sentiment to influence you. And again, contrarians, this is normal. Being a contrarian is not normal. It's tough, especially during times like this, when the whole world is telling us one thing, when our very upbringing is telling us these exact same things. Very few of you were brought up to take risks, to color outside the lines. And please understand, that is not your parents' fault. I doubt your parents understand the things we understand, because, again, we're very rare. If you zoom out, there are very, very few of us. And plus, like most parents, they were more concerned about your safety than they were anything else. And to most people, safety and risk are two polar opposites. So every single week I broadcast one of these podcast episodes, I know that I am swimming upstream. I am working against not only your current environment, but your entire upbringing as well. So yeah, broski, I'm going to be reinforcing a lot of concepts all the time. It's essential. And I think the majority of you see the value in this and appreciate it. And maybe you're like me, you like hearing these things because you're now on board with them. But, especially during times like this where emotions are high and moves are extreme, we really need to take the time to step back and reinforce a lot of what we believe here on the podcast, because many of you lose your way. And like I just said, it's a shame because these are generational times to buy more likely than not. So what I wanted to do this episode is bring up 3 of the most flagrant fouls that I see during times like this, so we can actively identify them and then make sure we're not doing them, because I'm already seeing some of you do some of these things. And as your fearless leader, it saddens me to see you guys finally approach the big stage and then blow it on some of the dumbest and most easily avoidable hurdles out there. So let's talk about them. The first one, and this is not something you're going to see in the media a whole lot, but I have brought this up several times on my other active podcast, the Trading Psychology podcast. But it applies to investing as well. And you don't have to admit it out loud, but I'd be willing to bet this applies to a lot of you who already have a decent sized stake in things like crypto and precious metals. So precious metals would be the most recent example, but we've seen this in crypto many, many times, to where you get these big run-ups, and then what do you instinctively do? It's the same thing everybody else does. They go to their account, they check the balance, and they say, wow, look at that. Look what I have accomplished. Look at what I am now worth. I'm so proud. I'm so great. Look at me. I was there, but now I'm here. This is a concept I like to call taking a picture. And this term comes from my very brief boxing background many years ago. Taking a picture is something that occurs when you get a really good, clean shot on your opponent. Now, what you do next means everything. What you're supposed to do, most of the time, is follow up, ratchet up the aggressiveness, go for the knockout if it's there, or at the very least, be able to score a bunch of points and take advantage of the advantageous position you put yourself in. Because as anybody who's boxed before, you know those moments don't come too often. But what inexperienced boxers will almost always do, because again, like I said, these moments don't come around that often, so when they do, they're a bit surprising. And what a lot of us tend to do, and I was really bad at this, is instead of following up, you'll sit back and admire the work you just did, therefore squandering a fairly rare opportunity. Now, the correlation here between boxing and investing in this particular case is not a direct one, all right? If it was, then the right answer from the investing standpoint would be to invest more and ratchet up the risk. And we all know at highs that is not what you're supposed to do. But the problem is, I guarantee most of you looked at your account and you took a picture and you marveled at it. You opened the entire bottle of champagne and drank it. That's not what we do here. Because we know that markets go up and down. Price moves in waves. Moments like we experienced throughout most of January in the precious metal space are not permanent. We didn't really accomplish that particular high number in our account. I mean, I guess technically we did. But to sit there and think that number's not going to go down at some point, and probably by quite a bit, like, have you seen markets before? That's what they do, you know? Now, we did have a pretty special fundamental event, which is still going on, by the way. The scarcity of the metals we invest in, it didn't all of a sudden change. So it was really interesting to see just how far a run-up like this could go, in silver especially. But it also happened in gold, also happened to a lesser degree in copper. And I guarantee every single one of you looked at your account. I know not to. I don't want that feeling. Now, for the first time, I actually did look at the chart intraday. I tweeted this out, and I said, man, I can't stop looking at this silver chart when it was just exploding the way it was, especially those 2 days where it really, really went up like crazy. because I was experiencing financial history. I couldn't take my eyes off the chart. But then soon after, when we also experienced financial history by having the largest one-day drop in a commodity ever, I also could not take my eyes off the chart because I was watching financial history unfold right before my eyes. And I love stuff like that. But at the same time, I don't really care what silver does right now. I am a very long-term buy and holder, and I think this whole scarcity story is just beginning. We simply do not have the silver and copper to do even a fraction of the things we're looking to do. So if price wants to go crazy high and then go crazy low again during this early time, it makes no difference to me. People are asking me in my silver miners when I'm going to take profit. I'm like, I already took profit a long time ago. And I really have to let this entire story play out before I consider taking profit again. But what I made sure to not do was go into my Charles Schwab account and look at the number. Because I've done it before, and I've learned. Taking a picture and marveling at the money you just made during the run-ups make the moves back down even tougher to deal with. Because now all of a sudden, you feel like you had something taken away from you. When in truth, you really didn't. Unless you took 100% profit on the entire move, that number in your account was never really yours to begin with. But these moves back down just deflate people so badly, and I guarantee you this is one of the biggest reasons why. And it gets people emotional. And if there's one thing I've dedicated my life to in my entire financial media career, it is pointing out how emotions are the enemy of trading and investing. They always get you to make bad decisions. In life, think of every terrible decision, like ones you still remember, they were that bad, like terrible decision you ever made. I guarantee you a high degree of emotion was behind it. Every fight I ever got into, everything I said to somebody I cared about that I wish I could have taken back, all happened when my emotion meter was all the way to 100. And to bring this back to investing, the margin of success can be so thin sometimes. We have to make the best decisions possible as often as possible. And that's going to be really hard to do when you just got done taking a picture. And now so many of those gains you thought you earned are no longer there. And look, man, I understand this is a tough sell. It's routine for most home traders and most home investors to go in and look at the unrealized gains in their account every single day, every single morning. And I'm over here telling you it's a bad idea. But I hope I was able to at least plead my case as to why. Don't do it. Moving on to number 2, there are 3 flagrant fouls in total. And number 2 is, I guess we've been talking about it a little bit already today, and that is getting caught up in the wave. To the upside and the downside, really. But it's really the downside right now, especially in crypto. And I think the best way to approach this is just to simply understand why it happens. If you can understand why it happens, then when it does happen, it's not a big deal. So I just got done speaking about how the mainstream financial media actively works against you. But I think most of us here in Contrarian land are already aware of that. The problem comes with the people who appear to be on our side. And for this, I'm mostly talking about what you see on X. I try to surround myself with some of the best thinkers in the space who do some of the best research and bring up some of the best points and who are able to keep a steady head under pressure. I want as many adults in the room as possible because I'm here making adult decisions. And so this is very important to me. The problem is I don't always know exactly who I'm dealing with until I see huge moves in the market. And this is to the upside and the downside both, but especially the downside, really. I need you all to understand, your average financial influencer, I guess, on Twitter is not really looking out for your own best interest because that's not where the money is. This is not the best thing for their brand. The best thing a lot of these people can do is cheerlead on the way up and then doom and lament and make jokes on the way down. And this only got worse, like way worse, once X started paying people for posting, because you need engagement to get paid. And this whole cheerleading on the way up and then dooming and lamenting and making jokes on the way down is honestly what your average idiot wants to see. And they got to get paid, right? It's like, hey, man, I'm just giving the people what they want. Well, how about you actually give them what they need? I mean, you're in the gold space. You're in the Bitcoin space. You've figured this part out by now, haven't you? Like, who in the gold and Bitcoin space by now, 5 to 8 to 10 years later, doesn't know that the right answer is the same answer it's been in investing since the beginning of time? Play the long game and accumulate, mostly on dips. The end. But that's not what they do. And in moments like this where the crypto market's falling at a high rate, these champions of Bitcoin and these champions of blockchain do nothing but fan the flames to the downside, because your average dumb crypto investor, and most of them are extremely dumb, they're going to see this and say, wow, all the people I have relied on to give me good information, I think they're smart. I think they know what they're doing with their money. They're all dooming and acting like this is going to be the end. Well, maybe I should sell my crypto here. And then they do. And not only does this make the price of everything go down even further, nice job, influencers, but you just indirectly persuaded your audience to do the exact opposite of what they should be doing. And I guarantee a lot of you who should all be buying with both hands right now are so afraid to because of the current sentiment. At the end of the day, most of you people are too afraid to lose. You are too risk averse for this market, and you're pretending like you're not. But you are. And you're so afraid to buy now. Well, my God, I just looked. You're going to get things like Chainlink and AVAX and Aave at prices cheaper than where I got them years ago. You have the opportunity to do that right now with good projects, but most of you won't. And I'm not talking about people who don't like investing in the blockchain. I'm not talking about you. I'm talking about the people who do. How many of you are excited about buying right now? If we're being honest, probably not many of you, because you're too caught up in this negative sentiment. You are too afraid price is going to go down further from here. Well, if it does, do you know what the sentiment's going to look like then? Worse than it is right now. All those people making the same tired, recycled joke. Look, I work at the McDonald's now. Hee. Yeah, there's only going to be more of that. There's going to be more of this, oh, it's all over, it's dead now talk. Just like it was in every other single down cycle when you were supposed to be actively buying. But you guys keep listening to these people who are only doing what they're doing to protect their brand and earn a few extra bucks on Twitter. And you lose sight of the fact that the real money, the mature money, the actual smart money, they're all building on these blockchains heavily because they invest the right way. They know it's the future. Yet you, at a super deep discount, are too afraid to make a move. And I think I pointed out one of the reasons why. You get too caught up in the hype on the way up. You get too caught up in the doom on the way down because you don't consider your source. And you allow these mercenaries, these people who are only in it for themselves, to influence you rather than just staying the course, buying things when they're cheap, especially when they're cheap like this, and accumulating. We here at the 10-Minute Contrarian Podcast, we are accumulators. We are, in a sense, collectors. And we understand there are some things to where the price really doesn't matter. If it's something like gold, silver, or Bitcoin, it's simply superior money. And you should allocate a portion of your inferior money to it whenever you can. Because in the end, the prices we're seeing right now are not going to matter. For example, you guys know, I bought Bitcoin at 8,600. I also bought it at 120,000. I don't care. I just want the Bitcoin. I am an accumulator. I'm probably going to pass all these down to my nephews one day, or kids if I have them. But the good news is during that time, if I ever need to draw fiat from it, I can. And there's probably going to be a lot more of it there than it would be if I just held the fiat in the first place. But when it comes to things like superior money, I'm not overly concerned with getting in at the best price. I mean, it's appealing when price drops, for sure. But I am not about to make this one critical mistake that I am about to present to you right now, and this is number 3, and this is probably my least favorite, especially as a technical analyst. Now, I think you could probably hear the disgust in my voice over 1 and 2. Wait till we get to 3. I'm going to do my best to restrain myself here. But lately, I've seen a lot of my own people do this. And I don't know why you're doing it. For the love of God, stop. Contrarians, I am over here begging and pleading with you with tears in my eyes. For the love of God, stop trying to call future price to the upside and downside both. You are not capable of doing this with any real rate of success. Nobody is. It is all one big fucking grift. I will explain. So I'm over here looking at, the comments and correspondence that I'm getting saying, well, I think Bitcoin is probably going to go down to this level here. And they'll always quote a dollar amount, right? The interesting thing is I've probably got like 7 of these predictions, and they're all different amounts. They're all different numbers. They're all different levels, which means at least 6 of them, probably all 7, but at least 6 of them are going to be wrong. So we here at the 10-Minute Contrarian podcast and on the No Nonsense Forex YouTube channel, we like to put the odds in our favor as best as we can. And for those of you scoring at home, 1 out of 7 and a probable 0 out of 7 is a really low probability and should be avoided at all costs. I said this very early on my Forex trading videos. Stop trying to predict future price. If you were to actually sit down and take all of your little future price predictions and track them to see which ones actually came true, you would be appalled and probably ashamed at just how seldom it actually comes true. My stomach turns every time I see these professional technical analysts come in on X, on YouTube, and make these price predictions based on their own technical analysis. First off, there isn't a tool out there that does a good job of this. Support and resistance lines are a guess. Fibonacci extensions don't even get me started on that. You are one small step away from voodoo at that point. And I say this with the deepest apologies to any voodoo practitioners out there. I actually have a lot more respect for your ability to predict the future than I do these technical analysts. Because I said this on X too. It's just like when a bank comes out and says, yeah, we think Bitcoin could go to here by the end of 2026. They have nothing to lose by making a prediction like that. First off, they're always wrong. Like, always. But is that going to make people not want to sign up to their bank? Is that going to get them laughed off the stage? No, because so many other people are doing it, it's easy to forget. And at the end of the day, most people want price to go absurdly high like that. So they're already kind of on your side. Again, you have nothing to lose by coming up and making these blind, stupid predictions. And these banks have some of the quote, smartest academics and economists in the world working for them. And they still do silly shit like this all the time. Like, I swear, if I didn't have the validation that I have gotten over the last 8 years in my media and my actual trading and investing accounts, I would probably end up in a padded room somewhere because I'm like, am I the only person in the world who sees this for what it is? But here's the bonus. Here's what's great is if these people ever find a way to get one right, like the stars just align and they actually nail one, they get to lean on that perfect price prediction that they just nailed. They can stake their reputations on that for years if they wanted to. Again, man, it all goes back to not having your best interest in mind. And for me, Those people got to go. I have trimmed down the amount of people I follow on X a lot just in this past year, this 2026. Because a lot of this foolishness really rose to the surface and I didn't see it before. Or maybe I just wasn't able to see it before, but I can now. If you really think you have an advantage when it comes to telling me how far price is going to go, either to the upside or the downside, that's all I want you to do. Just track it like you would anything else. And tell me what you come up with. So as far as solutions go, I think I covered a good amount of them in my ranting and raving for the last 25 minutes. But one thing I guess I will add is use your charts when you can. We spoke months ago how Bitcoin was giving us a bear signal on the monthly chart. So we should expect further downside. And then on days like today, I'm shooting this on Friday, where you get a really nice day and a nice recovery on certain things, understand that technically we're still in a down cycle. There's a better than likely chance that what we're seeing right now today is just part of a larger retracement. Like, it's funny, when things are raging to the upside or falling to the downside, it's almost like every human being in financial social media forgets what a retracement looks like. But either way, especially when it comes to crypto itself, especially blockchain, these things move so fast it almost makes our technical charts irrelevant. Bitcoin, less so, but blockchain companies, blockchain tokens, if it's cheap, man, and it's something you like and you understand the fundamentals and how great they are and how they haven't changed one bit in this downturn, well, it's probably a really good time to just close your eyes, hold your nose, and buy. It's what you should have done during every other downturn, if you want to go back and look. And just know, on every one of those downturns, every one of those cycle bottoms, the sentiment was also really terrible. It all goes hand in hand. And back then, there were oceans of people who got scared out of buying when they were supposed to buy. You were probably one of them, let's be honest. Are you going to be one of those people again? I guess for me, as a broadcaster in the contrarian space, I now have a whole bunch of episodes I can't wait to put out for you. Because when things are raging and going crazy to the upside, I really don't have a whole lot to talk about. But when you get these nice drops and things get on sale and the fundamentals haven't changed at all, well then, I have some really great topics to discuss with you. And I can't wait for all the pushback I'm going to get from the people who fell for these down cycle narratives. Now look, disagreeing with me is totally okay. We may all share a similar set of beliefs, but we're not all groupthink here. Groupthink is exactly what we try to avoid. But if you're going to disagree with me, I want you to come up with a good reason. Because I'm naturally just going to assume, right off the jump, that you have probably fallen into this poopy down cycle narrative. So in the future, if you don't like something that I like, that's fine. Just explain to me why that's the case. That's all I ask. Many of you have perfectly good and legitimate reasons as to why you don't want to invest in a particular thing, or even why you might want to short it. But saying that something is dead when it's clearly not, or telling me because your chart says it's got a further way to go, that's not going to score you many points here, for the reasons I just described. But contrarians, get your wallets out. It's that season. Not financial advice, don't do anything I say, but in precious metals, it is probably add-on season. And in crypto, it is pure buying season if you're not already adding on. I told you in the predictions episodes, we should have a lot of liquidity coming into the market in 2026 for many reasons. And I strongly believe the overreaction we're seeing in the markets to this new Fed chair, we're going to look back on this and look at it the same way we did during the tariff tantrum, when everything dropped hard for a couple days and then came right back up once everybody realized how silly they were being. But now more than ever, you're going to have to do things that are going to seem absolutely crazy, not just to the outside world, but probably crazy to you as well. This is just how it goes in a bear market. Act like you've been there before. Be crazy. Be early.